Hello and welcome to WealthyTrades.com. This is Tyson Clayton. I'm going to do a real quick special video. It is April 10th, 2015. I wanted to do this video because there's an interesting setup here. It is Friday morning, about 8:07, and as you know, you should know that Apple and a lot of stocks have weekly expirations. So today, a weekly option is going to be expiring in Apple, and there's an interesting setup here. The futures are up right now. They're about break even, up slightly, but I think Apple could potentially have a nice rally. It is in an uptrend, and it doesn't have a huge hit rate on Fridays, and in fact, it doesn't have a ton of volatility on Fridays. But if I can get a deal on the calls, then I'm going to. And what I mean by that is, it's got a 34.6% probability of hitting 127.64. Well, it's slightly down in the pre-market. It's down to about 126, so it's down about 56 cents in the pre-market. Well, here's what I want to do. I priced out the 126 calls that expire at the end of today. And so if I think about it, if I buy the 126 calls, right, and it hits 127.64, well, those will be worth at least $1.64, right? Because I have the right to buy the stock at $126. It then rallies up and is at 127.64. Well, obviously those calls will be worth $1.64. Well, it has a 34.6% probability of hitting that level. So if the call will be worth $1.64 when it hits that, then the fair price for that call is 34% of that price. So the fair value of that call is $56. So if I were just to I would not ever recommend buying the 126 call today in Apple for anything more than 56 cents, just based on probability. But here's the deal: I want to get a discount on it, so I'm going to buy or try to buy the 126 call for 45 cents. Okay, and the reason why is because if I can, I'm getting it at a discount, and there's a lot of value in it. Think about this: if I buy it for 45 cents, well, and then I'm going to target this upside. So I'm going to buy it for 45 cents, and my target's going to be $1.64. Why would I do that? Well, think about this: I've got a 34.6% chance of making that $1.64, right? So that means I've got let's say a 65.4% chance of not making that $1.64. So I've got a 65.4% chance of losing. Let's just say and this isn't even realistic, but let's hypothetically say that if I lose that 65.4% of the time, I lose my entire value of my call, which is really not realistic because, it might close at 126.50. But let's just say I lose the entire 45 cents 65% of the time, right? So 65% of the time I'm going to lose my 45 cents. I'm going to be down $29.25. Well, think about this. The other 34 times, I'm going to make my $1.64. I got to take out what the position cost me, which was 45 cents. So 34%, 34.6% of the time, I'm going to make a profit of $1.19. So let's take 34.6. So even though 65% of the time I'm going to lose my 45 cents, which again isn't really that realistic, and I'd lose about 30 bucks, the other 34.6% of the time, I'm going to make my $1.19, was it? Yeah, I'm going to make my $1.19, and it's a profitable trade. So therefore, again, that's how this is so powerful. And again, I'm going to do just a course and a video just on how to find undervalued options like this. This is my favorite type of trade, finding undervalued options based on the historical hit rates and putting the odds in your favor. This is exactly how you do it. I'm going to buy the Apple 126 call. Today's expiration, so the April 10th expiration, I'm going to buy the 126 call for 45 cents. That's my trade. My target's going to be $1.64. It's using the levels to win data to put the odds in your favor. It's extremely powerful. And the only place you can get information like this is WealthyTrades.com. Just wanted to show that to you guys. Thanks for your time. Have a great weekend.